It's good to see you guys once again. It's been a while since my last video was published, and I figured given that Bitcoin's almost about to hit its new all-time high, I'd be going over the paper I created last year and was sent out to close relatives and select friends who had questions on Bitcoin. If you've seen my other videos in the past, this was my first one. This is going to be different than that. This has to do with the fundamentals and just understanding it. What I'm going to be going over today has to do with the second order and third order implications of how this technology is going to change the world. So that's what we're going to go over today. Since I originally released my first video, Bitcoin's gone up 9 times. Since I started working on my paper, it's gone up 2.5 times. And since I published my paper last year to select friends and family, it has gone up 2x. So because I've received input that the paper was a little bit hard to read, I decided to convert it into video form so that it's easier to digest for you guys. I really do think it's important for me to explain this because so far my thesis has been playing out exactly as I predicted. And I don't care if you buy in. I don't care if you get it. I just want you guys to understand it. And so that way when the time comes and you actually have to buy it or you feel you might need to dip your toes in, you'll have the knowledge to kind of get you through it. So that is my mission today, and hopefully we could do that. I seriously think that Bitcoin is going to solve much of the world's problems. And by the end of this, both liberals and conservatives and even other third parties are going to see why Bitcoin is the solution, not the problem. As for the people that were gifted Bitcoin from me, just note that there's no money left in that wallet. I had to move all the funds given the current transaction fees are rising exponentially. I knew this was a possibility to begin with, but I didn't realize how quickly it was moving. So I figured better to be safe than sorry, because otherwise you guys would have had a Bitcoin wallet that was rendered useless because you couldn't move the Bitcoin due to high network fees. So feel free to reach out to me. I'm a man of my word. If I said I was going to give you any amount of Bitcoin, you're still going to have that amount of Bitcoin. So just reach out to me and we'll figure out a solution. And without further ado, let's get into my thesis from last year. I'm going to try and stay a little bit energized so this isn't as boring as it may seem. I know this is 21 pages, and 21 pages is kind of a lot to go through. So along the way, we're going to pause it, and we're going to kind of discuss what I was reiterating, just so that way you guys have a more personalized approach to this, and you can hear it from your own family members. Infinity divided by 21 million. Over the past 5 years, I've been studying Bitcoin relentlessly. I've probably spent well over 1,000, probably closer to 2,000 hours trying to fully understand what Bitcoin is and the results of it. But once you realize just what it is, you realize that this rabbit hole goes so much deeper than anybody thinks. I've come to the conclusion that Bitcoin, not crypto, will change everything in the not so distant future. Unfortunately, with how Bitcoin works, the people that understand it will prosper greatly from it, and those who don't will be left behind. For this reason, I do feel a moral obligation to all my friends and family to help them understand what this is before this transition takes place. Again, this isn't some get-rich-quick scheme, but rather a revolution that cannot be stopped. I urge you to not disregard Bitcoin just because you heard somewhere that Bitcoin won't work. The people that are saying this have not put in the work to fully understand it. Plus, they don't have skin in the game. I do. I put every single spare dollar I have into Bitcoin. After all my expenses are paid, everything gets swept into Bitcoin. I've even taken on levels of debt, all in the worry that I don't have enough Bitcoin for me and my close relatives. My only goal is to help plant the seed so that you understand it before it's too late. Even if you have little understanding of Bitcoin, I strongly urge you to read this. This is a non-technical guide to the implications of Bitcoin. And that's what we're going to be reading today. Bitcoin goes much deeper than anyone realizes. In this paper, I will be explaining the second and third order effects, which are extremely difficult to grasp. How does one begin to explain something that is bigger than the internet, probably bigger than any invention we have had in the past few hundred years? The answer is you can't. At first, I thought I was wrong, maybe even a little crazy, but as time progresses, I see more and more people waking up to this reality. The truth is, I really had many sleepless nights worrying about this. Because if this was true, then there's going to be very, very big implications of it. And so far, it seems like that is becoming the case. There is a lot to know about Bitcoin, and I never know where to begin. However, my worry is that by the time everyone begins to understand, it will already have been too late. So, my encouragement to you guys is to learn about it while you still can. This is a paradigm shift that cannot be stopped or ignored. Bitcoin only grows stronger by the day, and due to its hard cap, it's only a matter of time before enough people understand it and it's gone for good. Bitcoin is so incredibly simple, but the implications are so profound that I encourage you to keep an open mind and do not let past narratives dictate how you view this thing. Absolute scarcity. Did you know Bitcoin is the fastest growing technology ever? Compounding at a rate of 200% annually, Bitcoin will not stop until it consumes every asset class in the world. Right now, that's close to 1 quadrillion. We're sitting at $900 trillion in total wealth across the world. And surprisingly, Hal Finney predicted this possibility only 1 week after Bitcoin was launched. So how is this possible? In 2008, Satoshi Nakamoto released the Bitcoin white paper, and in the process, we discovered something that was previously inconceivable: absolute scarcity. This was something that was never previously observed, as we live in a world of abundance, a world with unlimited cash, debt, labor, land, minerals, food, intellect, and prosperity. The implications of this are profound, and they can be very hard to fully grasp, but essentially this means Bitcoin is going to infinity. Yes, infinity. Or another way to look at it is everything, and I mean everything, is trending to zero against Bitcoin. I'm going to read Hal Finney's original email response. One immediate problem with a new currency is how to value it. Even ignoring the practical problem that virtually no one will accept it at first, there's still a difficulty in coming up with a reasonable argument in favor of a particular non-zero value for the coins. An amusing thought experiment: imagine the Bitcoin is successful. That becomes the dominant payment system in use throughout the world. Then the total value of the currency should be equal to the total value of all the wealth in the world. Current estimates of total worldwide household wealth I have found range from 100 trillion to 300 trillion. With 21 million coins, that gives a coin a value of about $10 million apiece. So the possibility of generating coins today with a few cents to compute may be quite a good bet, with a good payoff or something like around 100 million to 1. Even if the odds of Bitcoin succeeding to this degree are slim, are they really 100 million to 1? Something to think about. Hal. And this was again in 2009. So total wealth right now is 900 trillion. Whether that's actual value or just inflation, it's, he was predicting 10 million many years ago, and now we're predicting 20 or more. For the first time ever, we have created an asset with an inelastic supply. Every asset inherently has an elastic supply, meaning if the demand for the good or service increased, the price would follow. This would incentivize more companies to produce the goods or service and thus drive the price back down. So basically what I'm going over here is the fact that this is the first time in history that we have a supply that's fixed. A supply that cannot be changed. It's hard baked into the code. Nobody can change it unless everyone agrees to it. And I certainly am not going to agree to it. So therefore it cannot change. So what is an elastic supply? So for example, if the price of a commodity like gold doubled, we would see more gold mines be created. It would take time, but the new gold would be produced and sold onto the market. Thus, it would drive the price back down, creating an equilibrium. The same thing can be seen through all asset classes, like real estate. So if the demand for real estate increases, so does the price. what we would see is more resources are put into developing more real estate. And again, this drives the price back down. And if a bond increased, new bonds would be issued as the cost to service the debt becomes cheaper and cheaper and cheaper. Some cases it's even free. Yeah, believe it or not, we already have negative yielding debt, which makes absolutely no sense. So it's like saying, take out this mortgage for $100,000 and pay it back in $98,000, and that's not even inflation adjusted. So we're entering into a crazy world, and it seems like Bitcoin's the only thing that brings us back to reality. If a stock becomes overvalued, what we'd see is more of the stock being issued by the company itself. They would take advantage of this by selling more shares onto the market, thus diluting our shares. Now, usually we hope that they invest the new cash flow wisely, because they had all that value that they sold onto the market, and they're using that cash. Usually it's to do other things within the company, but it's not always the case. You cannot guarantee that it's going to be spent wisely and increasing your shareholder value. So what's different about Bitcoin? The thing that's different about it is Bitcoin cannot be changed. The Bitcoin network only releases X number of Bitcoin every 10 minutes until all 21 million have been mined. This should take place around 2140. So even if the mining infrastructure tripled, we cannot increase the new supply that has been programmed. Approximately right now, every day there's 900 Bitcoin being issued onto the market. Issued or inflated onto the market, you could say. In a real small amount of time, in 2 months or less, we're going to have this jump down to 450. This is a really, really big deal. And I'm going to be explaining why. So even if there's this price surge and the demand caused the price of Bitcoin to jump to $1 million tomorrow, that's a lot of money, right? The miners cannot produce more of it. So it can't suppress the price back down. This is the only asset in history that's ever been able to do that. That's why it's so important you realize this. For this reason, Bitcoin is the only asset in the world that you can be priced out of overnight. This is why I started these videos. This is why I started this paper. Because once you realize this, you realize there's a time frame to this. You have to get in before it's too late. Once this stuff is bought up, it's bought up for good. Good luck buying it for any reasonable price. Because most of the supply hasn't moved in a year. I think it's something like 70% of the coins haven't moved in a year. There's only 1.5 million Bitcoin left on exchanges, which sounds like a lot, until you realize the new ETFs that were just issued are buying approximately, I believe the number was between $100 million and $500 million worth a day. So in a year, all of it would be gone, assuming the price stayed the same. So this is why I urge you guys to really understand this. There's a lot of brevity in the situation, and time is ticking with this stuff. So every 4 years, Bitcoin goes through a halving, and it reduces the supply. This is a little bit outdated, but I believe we're going to be somewhere around here soon. And once that happens, you cannot get more on the market unless someone like me sells it. And there's a lot of people out there that refuse to sell. Absolutely refuse. So we basically set the price. So as stated previously, Bitcoin is mined into existence every 10 minutes. However, what I didn't mention is that this is the new mineable supply dwindles exponentially. So for the first 4 years of Bitcoin's life, it produced 50 Bitcoin every 10 minutes. After 2012, I believe it was, it went down to 25 Bitcoin every 10 minutes. And then in 2016, it was 12.5 Bitcoin produced every 10 minutes. In 2020, it was 6.25. And Once April hits, we're going down to 3.125 Bitcoin, if I got the math right, and it decreases exponentially from there. So you see that most of the supply has already been issued. I believe it's like we only have about 6% inflation or issuance rate forever. You have with the US dollar, you have 2% that they say every year, when in reality it's closer to 8 to 10%. So it's basically an asset without inflation. Once you realize, if you start thinking in terms of 21 million Bitcoin, then there is no inflation. This is the first asset in history with that. So that's basically the long story with that. It just dwindles exponentially. So what does this mean? This is crucial because a lot of the sell side pressure is caused by the Bitcoin miners. It's an energy intensive business that costs a lot of money to run. So usually these miners have to sell on the open market, and they're selling most of the Bitcoin that they mine. And this basically means after the halving, it's going to reduce the new supply of Bitcoin by 165,000 per year. That's quite a bit. At the time, that was $4 billion worth of Bitcoin. I think it's closer to $10 billion less that needs to be absorbed onto the market every year. So it's a really, really big deal. So assuming that the price of Bitcoin was 25,000, if the demand stays the exact same, the price has to go up. This is what people don't realize. Assuming the demand stays the exact same and that there's not a lot of sellers, the price has to go up. It's basic first grade math. But it doesn't go up linearly. It goes up exponentially because market cap is set at the margins of the buying pressure and the selling pressure. And with something like Bitcoin, where it's not really sold that often, only a small amount of coins, like I said, it's only 1.6 million are on exchanges. And of that, let's just say 500,000 are traded. Those are traded quite a bit of times. So it's a highly liquid market, but the total market doesn't move a lot. So you have, for every dollar that goes in, Bank of America found out that for every dollar that goes in, it increases the market cap by $118. So what this means is when we have an unlimited amount of money chasing a finite asset, it drives the price exponentially to the moon. Like, this isn't just some get rich quick scheme. This is just how the reality is. And that's from Bank of America. Furthermore, most of the supply has already been mined. 92%. And over the next 10 years, 99% of the Bitcoin will have already been mined. Because like I said, it goes exponentially. It decays exponentially. So that means the last 1% of Bitcoin that has to be mined is going to be mined over a 100-year period. So good luck getting this once that happens. You're not going to be able to. It's going to price you out of the market beyond your comprehension. So that's what people don't understand with this. And as adoption begins to rise, the number of Bitcoin on exchanges quickly declines. And actually, we're seeing that right now at a record pace. Lots and lots of Bitcoins are being drained from exchanges, never to be seen again. There's people like me that are buying Bitcoin every 2 weeks. Whenever I get my paycheck, I pay all of my expenses, and then everything else is swept into Bitcoin. And I'm not selling. Maybe I'll sell later down the line when we get into a hyper Bitcoinized world where people start valuing Bitcoin as the base layer of money. And then that's when things change. And there's a lot of people out there like me. So out of the 21 million Bitcoin that we have, there's only 2 million left on exchanges ready to be sold. That's less than 10%. And right now I know it's less than that. This was made last year. It's gone down 500,000, I believe, in the last year. So on top of that, we have a new investor class entering Bitcoin. Previously, people were unsure if Bitcoin was going to stay around, so they were trading it. And now I think it's starting to be solidified that this is an asset class that isn't going anywhere. BlackRock, Fidelity, all of these big institutions with tens of trillions of dollars under management are now beginning to go into Bitcoin. I believe it's BlackRock owns now, through its investors, holds $10 billion worth of Bitcoin. This was launched 2 months ago. So it's going quick, really quick. And this isn't something that I even imagined when I created this paper. So it's going a lot quicker than I even expected, which is why I'm really doing this video. Bitcoin solves the store of value problem for 8 billion people globally. It is only a matter of time before people start realizing and start buying as much Bitcoin as they can. There are more than 50 million millionaires in the world and only 21 million Bitcoin. Since Bitcoin is finite, that means the average person could theoretically hold 262,000 Satoshis, or this amount of Bitcoin. A Satoshi, if you don't know, is 1/100 millionth of a Bitcoin. So now you know. Because a lot of people don't realize you could buy fractions of a Bitcoin. You could buy $1 worth of Bitcoin. You could buy $10 million worth of Bitcoin. It's digital, so you can move the decimal place to any number of places you want. Now moving on to corporate adoption. In 2020, MicroStrategy made headlines as becoming the first publicly traded company to buy Bitcoin for its balance sheet. The company initially purchased $250 million worth of Bitcoin. However, this wasn't enough for the company. So they have done whatever it takes to acquire more funds to buy more Bitcoin. The CEO says that the company is adopting a Bitcoin standard and will focus their entire efforts on accumulating more Bitcoin and never selling. Never. So if you continually buying in a currency that just goes up in value, we always have more money out there chasing a finite asset. It goes up forever. Now the company has spent over $4 billion on acquisitions and controls 138,000 Bitcoin, or 0.6% of the supply that will ever exist. This was last year. MicroStrategy has been making leaps and bounds on that, more than anyone expected. They've been issuing more debt. They've been selling off shares onto the market and diluting shareholders. But then what they're doing with that is buying more Bitcoin. So since then, now they control close to 200,000 Bitcoin. I believe the number is 193,000 Bitcoin. So they've increased quite a bit, and that's only in a span of 1 year. And this doesn't even top the top 3,000 companies, most valued companies globally. So just imagine if a larger company starts to buy with even a little bit of Bitcoin. Currently, the top 5 companies at the time of this writing held $500 billion in cash reserves. $500 billion in cash reserves. That means their cash is losing over $9 billion a year in inflation. And that's at 2% numbers. We all have been to the grocery store, and we all know those numbers are far lower than actual reality. Technically, it's closer to 9 to 10% that it averages. During COVID, it was an exceptional year. It was a lot higher than that, and I'll go into that in later detail later down the line. So there is only so much growth that these companies can achieve. And at these companies' current size, further expansion could break U.S. antitrust laws. So their options are limited. They can't really grow much more. They can't produce more business arms, or the government's going to go in and break it up. Government bonds have never kept pace with the true inflation. So companies will be incentivized to start looking for other means of preserving their purchasing power. And if you were one of these companies and you decided to hedge itself and buy even a little bit of Bitcoin, they would buy up a fixed percentage of a supply that cannot be inflated away, further driving up the price. Now we'll move on to nation-state adoption. It's not just corporations that are adopting. In 2021, El Salvador was the first of 2 nations to make Bitcoin legal tender. This means that Bitcoin is accepted as a means of payment across the country. El Salvador is significantly less prosperous than other nations. And so many of their citizens work abroad and send money home. They send about 24% at least per the United Nations. The cost to send remittance payments is between 2 and 6% of the value sent. Therefore, El Salvadorian president believes its citizens could be saving $400 million a year in remittance fees alone by adopting Bitcoin, since you could send and receive Bitcoin instantly and cheaply. Not only that, but El Salvador has spent over $100 million buying Bitcoin for its treasury. They will continually buy 1 Bitcoin a day, according to its president. It doesn't stop there. El Salvador is raising $1 billion to advance Bitcoin by buying $500 million worth of it to creating a Bitcoin city. And the other $500 million would go towards buying more Bitcoin on its balance sheet and its treasury. I know this may not sound like a lot considering the global wealth is closer to $1 trillion. So you do the math and you realize this is a very, very small fraction of it. But it wasn't even 4 years ago that people thought this was unfathomable at itself. Now people's perceptions are beginning to change, and they're changing rather fast. Currently, this nation has 1/800th of the US GDP. But what happens when larger states, nation states, start adopting Bitcoin in the interest of national security? And Jason Lowery started going through that, his thesis. He's one of the guys on the Department of Defense advocating for adopting a Bitcoin standard. He's not saying it for them to increase their wealth. He's saying it as a means of national security. So game theory dictates that the earlier one nation adopts, the better off they will be. Smaller nations are likely to adopt first since they have the most to gain, and the larger nations will be forced in at a later date because they have the most to lose. When larger nations with the world reserve currencies start buying, it will have been too late, as Bitcoin is the only asset in the world that can price you out overnight. The US can borrow unlimited sums of capital to buy Bitcoin. You cannot. So that's the game theory behind it all. Once one nation starts doing it, the other nation has to kind of capitulate and go in. It's kind of similar to the arms race post World War II era with the nukes between the US and Russia. This is going to be something similar, but it's going to be in regards to buying an asset that everyone wants. So now we're going to go into our next section. There is no second best. Saylor said this first. He was the guy who adopted the Bitcoin strategy for MicroStrategy in 2020. And why is that? Well, Bitcoin is the greatest store of value ever created, and it isn't because it's finite. That's only one of the reasons. Everything in this world is inherently risky. Bitcoin is not. Since Bitcoin only exists digitally, we have far less risk than is possible in the natural world. And now I'm going to be going into each asset class that everyone invests their money into to keep their purchasing power. So the biggest one by far is real estate. I believe real estate has somewhere in the approximation of $200 to $300 trillion of value stored in it. So since real estate cannot be moved or sold instantly, there's geographic risk, and that is its biggest shortcoming. In real estate, zoning laws and property taxes affect valuations. If the local government suddenly decides to levy more taxes on your estate, you have to pay it or you risk your property being seized. Unfortunately, real estate cannot move. So the only way to avoid paying high taxes is to sell your estate. However, there is less demand for a property with high taxes. So your real estate loses value. Since real estate is illiquid and non-fungible, meaning that each house is unique. One house isn't the same as one house. They're completely different assets. You have to look at it on a case-by-case basis. So even if you wanted to sell, you would have to wait weeks, months, maybe even a few years to find a buyer. And even then, you still have to pay the agent's commission, usually between 5 to 6% of the home's value. However, Bitcoin is extremely liquid and does not have geographical risk. You could sell or move your Bitcoin instantly and for minimal to no cost. Even if the government wanted to tax holding Bitcoin, they would have to do so at a much more reasonable rate or risk capital flight. The best analogy I could think for this is trying to hold a fistful of sand. The harder you squeeze, the more escapes. The more governments are hostile towards Bitcoin, the more Bitcoin will leave the US to more Bitcoin-friendly jurisdictions. With this capital flight comes missed economic opportunities that come from having an affluent community. So the government would have to think twice about making such a move. Such is not the case with real estate. Further, real estate opens you up to a vast array of risks. Let's take a look at some of them here. Real estate cannot be moved, as said. If a community enters an unforeseen economic downturn, will worsen the prices for the worst. Just look at Detroit. Detroit, Michigan was a booming place when cars were manufactured there. But after that went awry, it kind of went through the shitters. Nobody wants a home in Detroit. So there's a lot of things that, even though the house is good, people aren't going to want to move there if there's no economic opportunities there. Further, you have pollution and pests that can decimate your property values. Same with political instability. Foreign investment decreases in areas of political unrest. Now I ask you this, would you want to buy a home in Iraq? I sure as hell wouldn't. Additionally, natural disasters are a problem for many parts of the world, and you have to continually pay high insurance or risk losing everything. And since Bitcoin is digital property, you no longer have to face these risks. Plus, there's no maintenance or upkeep. How is that for you? There's no risk with tenants either. Now bonds, we'll move on to that. Bonds are not risk-free. There's always a risk of not being repaid, even at the governmental level. Perhaps you live in the US, where the government can just print more money to repay you. Yes, you are getting your dollars back, but it isn't the same value since they diluted the currency to pay you. Additionally, if you borrow from anyone, you have to anticipate your interest rates will be more than inflation, or you will lose purchasing power. Unfortunately, or fortunately, most debt is cheap. The interest rates will not cover inflation, and you are almost guaranteed to lose value. This is good for people that take out mortgages and such. They're basically paying a mortgage with a percentage that's lower than the actual inflation rate, not the reported CPI numbers. So with bonds, you're basically guaranteed to lose money. And if you wanted to have a higher yield than inflation, you are forced to speculate on riskier and riskier bonds that have an increased chance of bankruptcy, i.e., you're not going to get any of your funds back. If your counterparty that you lend to goes bankrupt, you will lose some of or all of your investment. With Bitcoin, there is no risk of insolvency. If you own Bitcoin, you own it yourself. You don't rely on other people. That's the beauty of it. So there's no risk of bankruptcy because there's no counterparty risk. Plus, there's no risk of dilution. Now, I will say one caveat to this is if you lend out your Bitcoin. Take it from me. I lent out my Bitcoin on Celsius and I got absolutely screwed. Celsius went bankrupt and I lost a lot of money. Don't make the same mistake I do chasing yield. I seriously urge you to not do that because it set me back quite a bit. So if you buy Bitcoin, take custody of it. Don't leave it on an exchange. Don't buy the ETF. Buy physical Bitcoin and take it off the exchanges. I will teach you how if you contact me. Now let's move on to commodities. Commodities refer to precious metals, food, and so forth. So perhaps you wanted to store your wealth in a commodity like food. Such was the case in Weimar Germany during the hyperinflationary period between 1921 and 1923. The problem with food is food goes bad. So you either have to trade it or lose it. On top of that, you cannot control trade wars between countries. Soybean farmers took a massive hit during the 2018 US-China trade war because they stored their value and their wealth in an asset that relies heavily on exports. Many of these farmers were wiped out due to risks that they cannot control. Further, once-in-a-lifetime natural disasters can destroy all of your crops and thus your wealth. Bitcoin doesn't go bad, and it is immune to natural disasters. Like I said before, even if a nuclear war took out half of the world, your Bitcoin will be fine. So it's unaffected by trade wars and the such. So why not metals then? Metals are a scarce resource that doesn't go bad, and some metals like gold and silver are hard to produce. So a little bit of it represents vast amounts of wealth due to the amount of work it took to mine. This is what led gold to being used for thousands of years as money. Money is also another word for store of value. People seem to have forgotten that since we've moved so far away from that. The problem is that the trade has become increasingly more global and people need to convey value across space at an ever-increasing rate. Trading gold on the international level takes months, years to move, and is expensive to do. This is why we adopted paper currencies in the first place. The former US dollar was backed by gold. It was basically a paper certificate saying I own this amount of gold and I can withdraw it from the US government. However, a promise is only as good as the person/entity who makes them, and the government is often full of breaking promises. This is what happened in 1971 when the US broke its promise and temporarily suspended gold redemption. You could thank Richard Nixon for that. Since this point, our dollar has not been backed by anything more than a broken promise. But I digress. Since Bitcoin is a bearer asset, you no longer have to worry about another broken promise. Additionally, because Bitcoin exists digitally, you can send and receive as little as 1/100 millionth of it. Anyways, what that basically means is you could represent value at a very, very small amount of Bitcoin. And you could do this and trade this anywhere around the world instantly and cheaply for less than a cent. You can't do this on the base layer, but you can do this via second and third layer scaling solutions such as Lightning Network. This means you could convey value at every single level, which you couldn't do for gold. Plus, you no longer have to worry about a massive gold reserve will be found, thus diluting your future representation of the asset and its value. Say you hold X number of gold, say you hold one of 300 million tons of gold. It's always going to represent that. As soon as there's more gold found, your value in the total network goes down. This is why Bitcoin is referred to as digital gold, but it's much more than that. Because, like I said, it's finite. It's so much better than digital gold. Since gold is physical, anyone can seize it from you. Gold was seized from the Jews during World War II. And gold was even seized from the US citizens from 1933 to 1974. So don't think it's not a possibility wherever you live. This was headed by FDR. Famous Franklin Delano Roosevelt made it illegal to hold gold as an investment. And why is this bad? Well, gold was the base layer of money. So basically what he did was he confiscated all of the gold from the Americans. I believe it was $12 an ounce he paid them, and then immediately he valued it at $20 an ounce. So you could see that the government may not always have your best interest in mind when you think about it. However, Bitcoin is just information. So you can store it in your head and nobody knows you have it. All I have to do is remember 12 words. Hell, I can even remember a color, and that represents my Bitcoin. Nobody could take that from you. So if you're ever fleeing a nation where there's a hostile regime, and I'm not saying this is going to happen in the US, but think about people in China. They're trying to leave with all their wealth, all of the economic energy that they put into this world, all the value that they created, and they can't leave with it because it will get seized at the airports. You can't even carry more than $10,000 worth of cash through a US airport unless you register it with them and pay a fee. This is because they don't want capital flight existing. But with Bitcoin, you could represent $1 billion worth of Bitcoin and you could store that in your head. Nobody can stop you from using that. Nobody would know. So this gets rid of the fear of basically your assets being confiscated. So the only way the government can get your Bitcoin is by you telling them your seed phrase or having them guess it. And what a seed phrase is basically just a large number. It's just a large prime number. And the possibility of guessing this number is exponentially difficult. So I'll go into that more later. So basically, it's got all of the upside of commodities and none of the downfalls. This is why it's the best form of money ever.
My nigga John lost his voice here. Fly. Your deal Double G will be taking over from here. For all the real ones, you know what to do. Equities like stocks have been the cornerstone of the modern investor's portfolio. Stocks usually perform better than bonds over the long run because there is virtually limitless risk, thus yielding a higher expected return. Since equities derive their value from the underlying company, one has weighed the risks of each company at any given time to determine its fair value. If a company is strong, growing, or paying a dividend, the shares in the company will demand a higher price. Your job is to find what the value is for each stock. With stocks, you have so many different risks. There are risks surrounding the board of directors/CEOs. These individuals have such a large impact on company that the leader can make or break a company. For instance, look at Apple a decade after Steve Jobs was removed as CEO. This was a decade of no innovation and slowing sales before his eventual return in 1997. Apple may not be the behemoth it is today if it wasn't for his leadership. On top of that, there are risks surrounding competition. Amazon destroyed many retail behemoths like JCPenney, Macy's, etc. during a time when it was thought impossible. There are risks surrounding intellectual property. Patents help determine the value of a company. After a certain point, these patents expire. Many pharmaceutical companies derive value from this property. But when the patent expires, so does their stock valuation, at least over time. Further, there are risks surrounding company culture. Enron supported high growth at any cost, which led workers to become actively involved in overinflating their numbers and hiding their losses. This led to their own demise when they blew up in 2007. All the employees lost their jobs, and all their shareholders lost everything overnight. Do we really need to be taking this much risk to keep our wealth? But that's not all. There are legal risks. Laws are ever expanding. Complex laws can create gray areas where it is unclear if something can operate. For example, the Mary Jane industry. Kush, pot, or marijuana as it's commonly called, may be legal in many states, but the federal government can stop it at any point and your shares in a company are worthless. Even a country's currency plays a large impact on valuations. For example, companies in Venezuela are forced to accept the bolivar, which has undergone massive hyperinflation. If a company can reasonably profit X number of bolivar a year, if the bolivar goes down in price against the dollar, then so does their business valuation in the global market. And that shit is whack. Now back to you, hustler.
So easier way to think about this, if this doesn't come intuitively to you, is think about the price of gold. Gold miners produce X number of gold every year. But if the value of gold goes down significantly, let's just say it drops to 10% of its original value, well, guess what? The gold miners are only producing 10% of the value that they originally produced. It's the same concept. And I could go on and on about all the possible risks of stocks. And unless you do this for a living, you're going to have a really hard time keeping up with the information. That's why most people invest in mutual funds and ETFs. Bitcoin has none of these downsides. You don't have to analyze it constantly because Bitcoin has no management, it has no employees, it has no patents, it has no competition, and it isn't location dependent. So don't you think it's time we stop from jumping from asset to asset to rebalance our risk appetite, constantly getting taxed along the way just to keep our wealth? If so, maybe it's time for Bitcoin and everything it entails. Everyone thinks Bitcoin is volatile, but let me ask you this. With an asset that has significantly less risk than stocks, bonds, and real estate, as we discussed above, and has a fixed supply, how can that ever really be volatile? It's a stable asset. The answer is it isn't. It isn't volatile. It's volatile in the way we measure it, which in the US is going to be US dollars. In 2020, the market became extremely euphoric in a time when we produced less goods and services than the year prior. I think we can all agree that that makes zero sense. So why is that? Well, the reason for that was having to do with the Federal Reserve changing the price of money by lowering the cost to borrow to near zero. So basically, we artificially printed new money into the economy, which helped prop up financial assets. That's why real estate, stocks, and crypto went up much more than the actual reality was. This led to a devaluation of the dollar at a rate not seen in over 50 years, possibly ever, which is why asset prices skyrocketed. When the Federal Reserve began reversing its operations, asset prices fell right back down. They're still higher than they were, but that's because we haven't fully reversed course. The only way to increase value into the economy is, believe it or not, to increase goods and services. Just because we change the price that we measure it in doesn't mean there's more value. So this is different with Bitcoin. One Bitcoin, since it cannot be diluted, is always going to be worth one Bitcoin. This is not the same as the US dollar. One US dollar right now is not going to be the same value as one US dollar 20 years from now. If you don't believe me, just look at the price of a Big Mac 20 years ago. So yes, Bitcoin is volatile in US dollars in the short term. Days, weeks, months, but over years it goes up. Generally in a 4-year period it's always up. And over decades it's going to look exponential. So now moving on, why not other cryptocurrencies such as altcoins? Bitcoin has already won. Despite the tens of thousands of knockoffs, all have failed to live up to Bitcoin. Don't believe me? Just look at this chart of cryptocurrencies compared to Bitcoin. All but 4 have not been able to outperform Bitcoin during a 4-year period. And this will likely continue to be the exception going forward. What really drove it in for me was the fact that all of the traders that you see on YouTube in cryptocurrency, they take profit in Bitcoin. They don't take profit in Ethereum. Maybe some might, but the general gold standard is Bitcoin. They always go back to Bitcoin. So why is that? Well, a lot of these altcoins don't solve anything. What Bitcoin did was truly one of a kind. It's the first time we've developed a finite asset. By very definition of that, you cannot rediscover a new finite asset. So it's the first and only asset that could ever do that. Further, it wasn't about network throughput. It wasn't about speed of transactions. It wasn't about these decentralized applications, which are only decentralized in name, which is basically what Ethereum is going after. It wasn't about any of that. It was about separating money from state. This is a hugely profound idea. The The last time we've had anything come close to this is separating the church from the state. So this is a really, really big idea. Altcoin proponents, which is anything but Bitcoin, is called an altcoin for reference, think that we need to decentralize everything. But they don't realize decentralization comes at a cost. Decentralized systems are far, far less efficient than centralized ones. That's why they should only be used in certain situations. Not every single thing needs to be decentralized. Bitcoin, like I said, it was never about that. It was about separating money from state, and that's what's truly important about it. No other cryptocurrency has come close to separating money from state. And ever since Bitcoin, its inception, there's been a large debate on how we're going to scale Bitcoin. This is because Bitcoin can only process 7 transactions per second. Visa, on the other hand, can process 24,000 transactions per second. So how can it be the next currency of the internet, the next money of the world? Well, Bitcoin has decided to scale via second and third layer solutions, whereas most altcoins, they're just trying to fix the base layer, which basically means they're providing updates to the base layer of the network, constantly changing the code. This produces a lot of unforeseen risk. That's why it's imperative that we don't update the base layer unless absolutely necessary. So because Bitcoin scales via second and third layers, that means if one of the layers goes awry, not everyone is wiped out. Not everything that we've worked towards is wiped out, which is really good if you're storing all of your economic value into it. Let's just say something like Ethereum, which constantly goes through updates. They release their new code upgrading the network, but there's a bug that they don't see. And the bug basically causes infinite amounts of Ethereum to be issued onto the market. This basically destroys its value. It's worth next to nothing to produce, so then it, by definition, goes to zero. This can't happen on Bitcoin because we're not constantly updating it. We have had updates in the past, but they're backwards compatible, so it's a much different approach. Additionally, we're scaling through second and third layers. So a big one that we have right now on Bitcoin is a layer called the Lightning Network. This runs on our second layer, and you could put money on there. And if the layer goes awry, Bitcoin does not. Only the second layer does. So this is a way that we're able to basically separate the risk of updates to Bitcoin. And through the Lightning Network, which has been going on for, I believe, 6 years now or more, it can process unlimited amounts of transactions for next to nothing. And when I mean next to nothing, I mean not even pennies. So that tells you all you need to know on that. You shouldn't be updating on the base layer, and I go into more reasons over here, but I'm not going to do that right now. Not to mention, these altcoins always end up changing their protocols. Like I said, if you update the code, what you're basically doing is updating the incentive structure. So imagine you're playing a game of Monopoly with your family, and halfway through, your annoying siblings decide that it's too expensive to build a house or a hotel. What do? They suggest, instead of paying what was originally established from the start, everyone now only has to pay a quarter of what they originally had to. You object. You've already built all of your homes for the full price. But since there is 4 of them and only one of you, their vote wins. This is effectively what happened to Ethereum, which is the second largest cryptocurrency. After the developers decided that they wanted to change the way it is mined. Instead of using proof of work, which is what Bitcoin and Ethereum used to use, they now use what's known as proof of stake. Basically, what this did was, overnight, it destroyed all of these investors' assets. They all became worth nothing because all of their mining equipment to mine Ethereum no longer work. And that's because they kept updating the code. They updated it, and then the miners were useless to the network. They had all this expensive equipment that serves zero purpose. That's not going to happen on Bitcoin. And this was actually a really big controversy at the time, because when they did that, the miners were threatening to basically break the network. So it's obviously kind of a big deal. This is why you don't try and change incentive structures once they're established, especially on the base layer of the internet and money. So a lot of these altcoins also say they're decentralized, but you have to understand who's the one changing the rules. A lot of them are controlled by specific entities, whether that be founders, developers, validators, or even a decentralized autonomous organization. A fancy way of saying we're not decentralized. If there is even one group that can control how the network is run, this opens up the possibilities that your transactions are censored. This is something that you wouldn't want on the base layer of the internet's money. So if the transactions can be censored, then might I ask, what is the point of it all? What was the point of decentralizing in the first place? You spent all this money trying to make it decentralized, and yet you are censoring transactions based off of what a small minority of the group thinks? It seems a little weird to me. And this is what Ethereum is currently doing. The US government released new laws mandating that they have to be OFAC compliant. And what did they do? The Ethereum validators started complying with that. So they started basically censoring transactions. That's not a good thing. I know if you're in the US and you agree that we should censor transactions, that's a good thing. But how about for the rest of the world? You want something that is good money for everyone, not just what is good deemed by a government. So if we allow these protocols to change the rules just once, even for the benefit of the community, we open up the possibility of future changes. Therefore, if we want to keep Bitcoin's network to continue to remain censorship resistant, or even hard capped at 21 million, so there's no more inflation ever, then it's imperative we don't change the base layer. I'm going to skip that part. Okay. New paradigm. We previously lived in a world where everything went up. Wages, stocks, real estate, gas, food, debt, etc. I'm sure everyone has heard the famous saying, back in my day. Well, only 100 years ago, a whole family could live off $3,200 a year. Now it has become increasingly hard to live off of $3,200 a month. Now I want to ask yourself this. If we live in a world where we can produce more things on a greater scale, more efficiently than ever, why is it that everything is always going up in price? To me, that makes absolutely no sense, especially when you realize that the natural state of the world is deflationary. And what that means is it's basically the opposite of inflation. Instead of prices going up forever, prices go down forever. Because that's what makes sense. That's what a naturally occurring free market does. So why is it becoming harder to buy a first home or start raising a family? After all, our grandparents bought their first homes in their early 20s without even having a degree. You know, we're the most educated generation, and yet we're struggling. Many will say it's the younger generations that are just lazier, dumber, more irresponsible, and perhaps that plays a role. But I believe the answer is much well below the surface. The truth is, if you corrupt the money, you corrupt the incentive structure. As soon as you corrupt the incentive structure, you corrupt society. And that's what I feel like we're going through right now. There's all this political divide, all this hostility towards one another, and it's all because we're breaking the money. There's so many downstream effects of this, and it's tearing society apart. So we currently live in a system where you have to work increasingly hard just to maintain what you had last year. producing more goods and services, working longer hours, and constantly having to innovate, all in the pursuit of endless expansion. And an example of this is Campbell's soup. Campbell's soup hasn't changed their ingredients in close to 100 years. You know, it's very basic ingredients. So I ask you this, why is it that for so long it was only 10 cents a can? And then right around 1970, it started going up and up and up and up. The inputs haven't changed. Perhaps the price of labor has, but other than that, it's all automated. The ingredients stay the same. So as technology increases our automation, shouldn't it be cheaper? I mean, the price of Campbell's soup right now is $1.29 according to Kroger. That's a 13 times increase. That doesn't make sense. And that's only in 50 years. So I ask you this. What is going on with the dollar? I think Michael Saylor really puts this into perspective. This is going to be an example of not only the price of assets, but the price of where we store our value. Right now, that's in the stock market. People believe that they're making money, but the reality is we haven't been making money for many, many years.
So you're going to be a smart investor. Here's smart investors, people bragging about making money in the stock market. The S&P index is going up 7 to 8% a year. And so you must be really smart. You invested in companies that are making good decisions. Look at the money supply. The money supply is going up at the same rate as the S&P index. And so what you begin to realize is most investment gains aren't really gains at all. All you're doing is simply tracking the monetary inflation rate if you're lucky.
So that's just the stock market. You know, people think that they're making money, but they're not. And the sad reality is stocks and financial assets go up 7 to 8% a year, possibly even more. But yet, your raises are not going up that high, and they haven't been for many, many years. Raises, I don't know what you guys get, but it's somewhere between 2 and 4%. That's only half of what inflation actually is. I mean, you saw it right there. The price of the M2 money, the total money in circulation, continually increases. To me, it makes no sense. And then they're going to lie to you and say it to your face that inflation's only 2% a year according to their CPI metric. The way they measure CPI, by the way, is they take a basket of goods and they measure it year over year. But the problem is, when you're the one controlling the data, you can manipulate the data how you see fit. And I believe the CPI has been calculated 23 different ways in the last 50 years. Not only that, they allow substitutes. So when former families used to eat steaks for dinner, that was included in CPI, they changed it to similar products. So now it's gone from steaks to ground beef, from ground beef to fake plant-based meat, and so on and so forth, until they can manipulate the data how they see fit. This is why they exclude the price of volatile assets, as they say. They don't include the price of housing in CPI. They don't include the price of energy, such as gasoline, heating. So, I have a question. Do you guys live in a house? Do you guys use energy? Why are we excluding this? Why are we continually changing the way we measure it? So, we expand our money to counteract deflation, which is the price of those goods and services going down, because the short-term pain of deflation makes it harder for those that have debts to repay them. So for instance, we force the money and the debt to expand faster than the goods and services we produce. This is where inflation comes from. Over the past 92 years, the dollar has lost 99.79% of its value in real estate. How can real estate go up year over year when it continues to deteriorate? It erodes. It becomes outdated. This is because we live in a debt-based system. It took me so long to realize why this was. It's because our money is based off of government debts, IOUs. So when the government runs a deficit, we all pay the price. Instead of allowing the free market to actually heal itself, what we're doing is washing away those excessive debts with more debt. We kick the can down the road, robbing the average person of their savings and their purchasing power, all in the effort to keep prices such as bonds, stocks, real estate up. We all know that paying off a credit card with another credit card will lead to a disaster. Then why would this time be any different? Things are getting worse and people know it, but nobody seems to understand where it's coming from. You know, the right will say it's the left's problem, and perhaps it is to a fault. The left will say it's the right's problem, and perhaps it is to some degree as well. But the problem is, when you're paying off debt with more debt, it's unsustainable. It cannot continue without increasing the amount of debt. And this is what we've had. Eventually, the government will have to pay its debts and stop running a deficit. However, even though this is what needs to be done, this is not the likely path we will take. Retirees want their Social Security, government workers want their pension, and nobody wants higher taxes. So the only way out is through inflation, perhaps even hyperinflation. And this is my big fear in the next coming 10 years, 20 years, 30 years. It goes up exponentially. Inflation erodes debt over time and confiscates wealth from the savers to the debtors. Who benefits the most from this structure? You guessed it, the government. Currently, the government has $32 trillion in debt. I believe we're at 34 now, if I'm not mistaken, and we're adding $1 trillion every few months. So that's pretty freaking crazy. With trillions in unfunded liabilities, such as Social Security, Medicare, pensions, etc. That's right, we have over $200 trillion we owe on this stuff alone. That's not factored into this. And with inflation at only 2% a year, the government is able to wash away half of its debt in 35 years. And if the Federal Reserve continues to let inflation run hot like they did in 2020, where they admitted there was an 8% inflation, it only takes 9 years for them to cut their debt in half. To anyone with a pension, a Social Security, a fixed income, or even a job, you are paying for this. I know this sounds like a good thing to have our debt basically eroded away. But until you realize that you're the one that's paying for this, that's when the true situation starts to become understood. At the current rate, your purchasing power will be cut in half in only 9 years, unless you get an 8% raise every year. And we all know that's not happening. If your pension doesn't go up with inflation, it will be worth half of its value in 9 years. And that's assuming you trust the government numbers, as the methodology used for calculating CPI has undergone numerous revisions since its inception. Just like I mentioned, the numbers are a complete lie. They're incentivized to do so. If you really want to, go look into it. I'm not explaining it further because I don't want to go down that rabbit hole. So your assets will have to go up in price. But are they really going up in value? Or is it the way they're measured and just going down in value? If you buy into Bitcoin, you're buying into money that's fixed. It will go up with inflation, it will go up with adoption, and it will go up when we create more value by producing more goods and services. This is why Bitcoin is a new paradigm. And with it, we regain the deflation that we had prior to paper money. Before, we had unlimited goods chasing unlimited amounts of money. But now, with Bitcoin as our new base layer of money, and once you start beginning to save in Bitcoin, you realize we can produce an infinite number of goods and services, and it's always going to be measured by 21 million Bitcoin. This is where it gets truly profound. So now you regain savings in a way that you never could. And this is going to be huge. especially when we're having AI come through. And I'm going to get into that in the sections below. That's a really, really important topic. So, deflation is the natural state of the free market. Things become cheaper as we are better able to produce more goods and services. Despite what many Keynesian economists think, we do not need 2% a year inflation to help grow the economy. And this is the bullshit that I was taught in college. It's just a complete lie. It's propaganda that was propagated by our government many, many years ago. Economics has always followed, for the large part, Austrian way of thinking up until World War II, when we had a lot of debt that we had to repay. And they took on this Keynesian way of thinking because it supported their narrative. But if you go back throughout history, everyone follows the Austrian school of economics, and that's the one I follow. And that's what Bitcoin follows. That's why it restores money. They say that we need an elastic money. They say we need inflation, like the US dollar, because if we had our money fixed at constant, it would only be hoarded. Destroy the economy by those savers. Those darn savers. But this is a misconception. People aren't going to hoard their Bitcoin never to spend it. Instead, they're going to save it and spend it on basic necessities, whatever derives value to them. People won't be spending their Bitcoin frivolously because they understand that saving it will produce more value to them in the future. Now, people will be convinced to spend their savings rather than being forced to spend it or invest it because their dollars are worth less tomorrow, and drives us to fully weigh the risks of deploying capital. That's a great thing. That's a really great thing. New companies can still pop up under a Bitcoin standard, as people will invest into companies that they think can generate a Bitcoin return. However, we will have gotten rid of zero value interest rate arbitrage, which is present in many businesses today. You will likely not make as much Bitcoin as you do now, and that is okay. That's because with this comes the ability for everyone to live in a world of abundance. Do you want to live in the future? Then you got to get into Bitcoin. Because otherwise, you're going to be working exponentially harder to chase the same amount of goods. That's how debt works. Once Bitcoin becomes a primary store of value, you will live in a world of abundance. Once Bitcoin becomes it will have sucked all the monetary premium out of all of the assets that shouldn't have become a store of value in the first place. People are hoarding cards, baseball cards, Pokemon cards, as their savings. Like, this has gotten absurd. People are buying housing, and they're thinking that that's an investment, when in reality, it decays, it becomes outdated, it needs constant renovations and upkeeps. People are storing their value in stocks, where there's all that risk. Same with bonds. And these should have never become store of values in the first place, i.e. money. And this is what we have now. So with Bitcoin, housing, you're going to like this, suddenly becomes affordable again. That's right. Instead of housing going up forever, housing prices are going up higher than our incomes. People are finally going to start utilizing it for its actual value, being a home. That's really good. That's really good. That means it's going to be cheaper for all the young people that are trying to buy a home for the first time. That means that we're not going to have billionaires out there buying all this real estate only to not rent it out, only to keep it as a store of value. They're actually going to utilize it. That's a really good thing. So prices of houses come down. Prices of everything comes down in price. So you're going to be able to afford things that you never previously could. And this is why when you look at Bitcoin, the longer you've been in it, the cheaper things become. Because we're able to produce more and more goods and services every year. And yet there's still a finite amount of Bitcoin. Perhaps you started the business you always wanted to, but you were too afraid to risk it, because if you failed, you'd be buried in debt. A lot of these businesses require debt just to get started. With Bitcoin, you're using savings. You're not using debt. Maybe you want to take out some years and raise your kids, but you are worried about the possibility of losing your wealth or your partner's job during an economic downturn. I didn't mention it in here, but Bitcoin gets rid of credit bubbles, aka recessions, for the large majority. There'll still be small booms and busts here and there, but it's going to get rid of the large '08 recessions and depressions. So yeah, Bitcoin restores all of these possibilities because now we can save in a future better than we ever could. Ever that was previously possible. We no longer have to live in a world of uncertainty. Your 401k doesn't have to hit a certain benchmark, Dad, for you to retire. You don't have to speculate on which stocks will generate a positive yield, Grandma. You don't have to worry about if your Social Security will be enough, also grandparents. You can live in a simple world of comfort. Debt is a promise of today's productions. Equity is proof of yesterday's hard work. And this is because, like I said, our measuring stick stays constant. You know, we're not changing it. We're not constantly diluting the value of the dollar. Instead, we'd be keeping it constant and letting everything else just grow in abundance. But that's not all. We're only on page 12, baby. Bitcoin is an unstoppable political revolution. Bitcoin is not only a financial revolution, but it's a political one. And this really hit home with me. Bitcoin separates money from state. No longer will the governments have a monopoly on money. They're not going to be able to loan themselves infinite or print infinite money out of thin air just to buy whatever they want. This is finally going to make the state beholden to the people. You know, everyone's complaining about the politicians doing this and that, and they're blaming both sides of the aisle. When the reality is, why don't we just take the power away from them? Why don't we just take away the money printer away from them and make it so that they actually have to work on our own well-being? The only way for governments to actually obtain Bitcoin is through direct taxation. They can't print it into existence. They can't. It's impossible. They have to tax it, and taxing's a lot more fair than the hidden tax of inflation. And when the public actually sees how much money is actually being taken out from them, first off, I doubt we'd have as many socialists. Secondly, they're going to scrutinize the way the government spends its money at every step. And they're going to demand that they budget responsibly, improving government efficiency. If you don't think the government is inefficient, look at some of Rand Paul's publications on the way taxpayer dollars were spent. Like, you can't even make this shit up. Bitcoin is the only asset you could ever truly own. Everyone's time on Earth is limited. When they pass, they pass. The next generation inherits the former's property. This is true with everything but information. The only way information is passed down is by you sharing it with another. Bitcoin is information. Because of this, if you die and don't tell anyone your seed phrase, all those 12 words that hold all of your Bitcoin are gone forever. It's impossible to guess it. Impossible. I'm not even kidding. This is important because it changes the incentives of violence. And this is really crazy. Many wars have been waged in the efforts to take another one's power. And money is the ultimate form of power, as it controls how the world's resources will be allocated. The problem is that historically, money was always physical. So by you using the threat of violence, one can rob another. You know, if you put a knife to my neck, you can rob me for all of my cash, all of my laptops, my computer, my phone, everything. But you can't take my Bitcoin. Why is that? Because I could store it in my head. Another way you could do this is, this means that nations can no longer seize your assets because it's just information. In order for the government to come get it, they would have to go to every single Bitcoin holder's house and sweat it out of them. All you have to say is, I don't remember it. And that could be true, that could be untrue. But the point is, they can't confiscate it. No government, founder, or board can take it from you. If you die, your knowledge dies with you. And I think that's incredibly profound. MicroStrategy's CEO, Michael Saylor, who I keep continually talking about, thinks this is huge. He talks about giving the ultimate gift to humanity is increasing all of your wealth, all of your Bitcoin, and then destroying it. If you destroy it, everyone's value goes up. You just gave back to mankind in ways that people don't even seem to understand. The best part about digital money is you could program it. That's right. You can do all sorts of things to make it more secure. Imagine you've been working towards growing a nest egg for your family. You could program your Bitcoin so that no matter what, these funds cannot move unless a certain parameter is reached. This parameter could be 3 out of 5 people have to digitally sign a transaction and agree to have the funds moved. This is called multi-signature setup. So they would have to basically kidnap 3 out of 5 people in your family in order for you to even move your Bitcoin. And if this gets noticed, the other 2 might have a way of accessing the thirds and just move it. It's very, very simple. And then those kidnappers get nothing. Like I said, it changes the incentives of violence, and that's crazy. You could have it so that the Bitcoin can't be spent for X number of blocks, days, years. The possibilities are endless. So this basically means that the robber can't rob you. Don't you see how powerful that is? I don't think we've ever had something that you can't be robbed of, except for maybe credit. This changes the power structure of the world. The only way to get more is to earn it fairly. Further, Bitcoin cannot be killed since it's an omnipresent information. The Bitcoin network is run by decentralized computers all across the globe, which agree to the new information, such as the transactions, being added to its blockchain every single 10 minutes. Since Bitcoin is just information stored digitally by computers, it isn't present in just one location. It can be rather present everywhere, just like the internet. Anyone can access the Bitcoin network anytime. The same way you could access Google anywhere on Earth, you can access Bitcoin anywhere on Earth. And you could send your Bitcoin, your value, anywhere, anytime, any way you please. The Bitcoin network cannot be shut down since it has validators, basically servers, running across every single region of the world. Plus, it's got the highest security of any network ever. This is the most secure database in history, and it's increasing exponentially. If you look at the hash rate, it's gone up exponentially, and it continues to go up exponentially. On top of that, there's no way to shut down the information since it can be transmitted via the internet, telephone, radio. The only way to stop Bitcoin is to destroy the idea and all it stands for. Therefore, you cannot kill an idea whose time has come. Because it's just information, anyone can generate a seed phrase, no matter where you are. A simple explanation of a seed phrase is that it's a master key to you accessing your Bitcoin. Think of it as a username and a password all rolled into one. It's these 12 to 24 words that control all of your Bitcoin and all you have deposited in them. Believe it or not, you can create a seed phrase just by flipping a coin 256 times or even rolling a die 256 times. This means that the government cannot stop anyone from storing their wealth. That's truly, truly powerful. Think about all those nations out there that don't allow their citizens to have rights. Think about China. Think about Soviet Russia back in the day. This allows them to escape communism. It's kind of a big deal. Some believe the government can confiscate your Bitcoin, but the only way they could do it is by guessing your seed phrase, unless you give it to them. And the number of possible guesses is 2 to the 256 power. I know that doesn't sound like a lot. It might sound incredibly small, but guess what? There are more possible combinations than there are atoms in the observable universe. Atoms. Can you imagine trying to guess which atom I have in the observable universe? I don't think you can. Even with the best supercomputers, you can never do it. Nobody can guess it. But that's why it's important to make sure that your 12 to 24 words that represent your Bitcoin are actually random. Don't pick the words yourself. Do not. Make sure it's random. Make sure you do it offline. Because if anyone gets access to this, all of it's gone. Poof. Lastly, Bitcoin is freedom of speech. Freedom of speech isn't just an amendment. In my mind, it's a human right. Without it, we can enter dark ages where we erase history and all of its lessons. It's a common practice for victors to rewrite history after war. They only share their perspective. After Hitler took over, Germany began burning books that went against their way of thinking, erasing countless lessons and knowledge of mankind. As the world becomes more Orwellian, there has been a small group of people that have stood up for what is right. Since Bitcoin is the most censorship-resistant technology, impossible to shut down, people have begun putting images on its blockchains that will remain there forever. Currently, Chinese citizens are now able to bypass China's firewall and view images that were previously censored. Recently, someone put up the infamous Tiananmen Square tank man onto the Bitcoin blockchain. Despite how hard China or other nations may try, they can no longer suppress free speech. And that is a truly, truly beautiful thing. And this is an example of an NFT. I know you've seen the stupid little monkey pictures. Yes, they could do that. Anyone can pay any price to put what they believe has value to them on the blockchain. I think the monkeys are stupid, but this is something that's really important. You know, people need to be able to see information. They need to be able to have their voices heard. And with this, your voices are heard all throughout humanity, forever. It cannot be erased. Can you imagine what would have happened if Hitler actually won and we erased history? How many lessons would have been lost? This is an incredibly, incredibly important idea. It allows those who are oppressed to view images that they previously couldn't. This is a really big... Bitcoin and technology. I mentioned AI earlier. And AI is increasing at an exponential rate. Many have raised the question, what will we do when technology eventually replaces our job? In a world where a robot can do our jobs better than we can, what is the point of continually employing employees? This is one of the biggest problems that is facing us in our future. And many have offered their solutions. Some prominent leaders like Elon Musk, Mark Zuckerberg, Andrew Yang believe that we will be needing universal basic income so that everyone can at least enjoy a basic standard of living, arguing that without it, we'd have widespread poverty for the lower half. Just right off the bat, why is it we have all this abundance and yet we're talking about poverty for the lower half? Like, what's going on here? Others believe we need to create work, any work, so that everyone can have a job. We may not have a need for this work now, but we might in the future. In China, they have created massive ghost cities with nobody living in them, all in the effort to keep people employed. Does that make sense? Personally, I'm against both ideas. UBI is just another form of socialism, which further expands the role of big government in our day-to-day lives. I don't know about you, but I prefer to be a little bit more free than being told what I can and can't do. Additionally, how do we pay for it? Do we increase taxes on the working class, perhaps the rich, to pay for the displaced workers? The workers who aren't working? Do we print money and borrow more money like we already do, further devaluing our currency and hurting the lower classes even more? In case you didn't know, inflation hurts the lower classes the most. Finding an answer that everyone agrees on will be very controversial. And having people reliant on the government for assistance makes them extremely vulnerable to government's influence. That destroys democracy. You know? If you have to worry about where your next meal is coming from, you don't give a shit who's in the office. You give a shit about eating. You give a shit about housing. As for creating meaningless jobs just for the future speculation on whether we may need it, I think that's just foolish and inefficient use of resources. This is essentially finding a solution to a problem we don't yet have. Luckily, I think we have the best answer, and that is Bitcoin. We live in a deflationary world. You are wealthier than most kings in past centuries. We have self-driving cars. We have planes that take us faster, further than was ever previously possible. We have homes larger, more knowledge at our fingertips than ever was possible, more plentiful food, and this trend will continue as technology advances society at an exponential rate, making us more efficient, allowing us to work for less for the same results. This is a really good thing. And people seem to think the opposite. People think we should destroy AI just because it might take their job. Well, first off, the cat's already out of the bag. It's going to take your job. It's just only a matter of time. Second off, why are we scared of the future? Wouldn't you want to have to work less for the same amount? I know I would. I don't want to work 40 hours a week. I'd rather work 24 if I could. Wouldn't you? We would rather build new technology that allows us to solve our problems so that we can move on to the next. That's what humans do. That's what ingenuity is. We create new technology that helps us do things faster and more efficient, allowing us to free up more of our time. Can you imagine if we still had to plow our yards for food? That's crazy. That's absurd. A money that grows in value as we're able to produce more and more things. With the deflationary money, you won't be forced to work harder and harder every year in a world that needs less and less of our work. Technology is advancing at an exponential rate, and it's only growing faster every single day. Why fight it? For once, why don't we just have our money work for us? That is the whole purpose of money in the first place. And we don't have to take extra risk for it. Most people won't have to work, and that's great. That's so great. That allows people to pursue their passions. You know, we only have a finite amount of time on this earth. Why the hell are we spending it working when we don't have to? We don't need UBI. We don't need to create jobs just for the sake of creating them. We do not need government assistance. What we need is to be truly free for the first time. And that's what Bitcoin offers. Next lesson. Fighting the misinformation. With a technology this innovative, this revolutionary, there's obviously going to come some misinformation. There's a price to that. So let's fight it. There's always been a lot of talk about how Bitcoin wastes a ton of energy and will destroy this planet. This has led many altcoin creators to create green, eco-friendly alternatives, claiming that their network verifies transactions in a more efficient and less wasteful way. However, this cannot be further from the truth. Yes, I agree. Bitcoin uses a lot of energy. In fact, it uses more energy than some small countries, but that's okay. I'm going to discuss the reasons below. To understand why Bitcoin uses energy and why that's not a problem, you first have to understand how Bitcoin works. The Bitcoin network uses what's known as proof of work, POW, consensus, to add transactions to its ledger, also known as the blockchain. On the Bitcoin network, Bitcoin is mined into existence every 10 minutes, as discussed above, by a decentralized network of computers running the Bitcoin code. These computers, known as miners, are operating 24/7 and are distributed across the world. These miners race to be the first ones to bundle a set of transactions into what's known as a block, and will post it to the network before any other miner has. Being the first to mine a block will grant the miner the right to collect any transaction fees and the current block subsidy, aka the new issuance or inflation. This goes down over time until the network fees solely fund the network. Once the work to produce a single block is simple, yet it takes an immense amount of energy. Once a block has been produced, the work is sent to all nodes and miners on the network to verify the miner's work has been done legitimately. Once everyone agrees to the new block, miners race to mine the next one, and so forth, continually adding a chain of blocks, aka transactions. If a bad miner tries to create a block without doing work or changes the network rules, say instead of 21 million Bitcoin, now there's 28, it's going to be rejected by everyone on the network. The reason why this is possible is because it takes an immense amount of energy to create a single block. You know, all they're doing is basically guessing numbers until they hit the right number. But once they guess the right number, they basically look at the formula and say, okay, yeah, the number checks out. That's the correct answer. You know, it's a simple yet really hard task to do. But once you verify it, you can basically see that the miner was working in your interest. They weren't faking anything on the network. I know from an outside perspective, it's easy to write off Bitcoin since it uses a lot of energy just to keep it up and running. But you shouldn't view it that way. Despite the mainstream narratives such as high energy usage, that's not a bad thing. High energy usage is tied to economic growth. You can see this by looking at the energy usage of the first and third world countries. The ones that have high energy usage have the most economic development. We want more development because with it comes more prosperity. It means that everyone's needs are being met. We have more food. We have more transportation. We're letting people live their lives as they see fit. Depriving the world of energy hurts the already impoverished and leaves them no means of escaping poverty. You know, I know everyone talks about, a decent amount of people talk about how we should basically go green. And they say the only way to do that is to stop using energy. You're just screwing over the poor. You're just screwing over the impoverished. Don't you want to give everyone an equal opportunity? A chance to escape poverty? A chance to actually have a home, have energy, have food, water, shelter? Like, I think that's a basic right. So what we want is not to reduce our energy, but rather to increase its usage, all while changing the types of energy we use. Perhaps we do this through incentives. So how does Bitcoin solve this? The Bitcoin mining stabilizes the grid by providing a free market incentive to use wasted or stranded energy sources like methane from landfills or flared/vented natural gas. If you didn't know, stuff like this is going to go in our air no matter what. But having Bitcoin mine it using this energy is far less toxic for our environment. So believe it or not, it actually helps us. To use energy, power companies must design the grid for peak demand, not the average daily usage. Otherwise, we observe blackouts. And when blackouts occur, productivity goes down. Trying to match power supply with demand is especially difficult with renewable energies because the sun doesn't always shine. The wind isn't always blowing. Moving our surplus energy to where it's needed the most isn't always plausible since it takes energy to move energy. According to the EIA, around 5% of energy is used just moving it. This is why energy needs to be produced fairly close to where it's being used. Unfortunately, even capturing our surplus energy in batteries doesn't always work. Batteries seep energy over time due to age, usage, etc. Therefore, we end up wasting all this surplus energy. Bitcoin mining, with its immediate on-demand energy consumption, can function as a flexible load that adjusts energy usage based on the grid conditions. This can further incentivize using renewable energies, since there's always going to be a buyer of last resort for this energy, thus making the renewable energy more feasible. So we could run the whole network, making the whole blockchain secure, making all the Bitcoin secure by using energy that we were going to throw away anyways. And in the process, we're incentivizing green energy. I don't know about you, but I think that's a win. Therefore, it's no wonder why most Bitcoin mining is actually powered by renewable energies, believe it or not. It's just a lot of misinformation that it's bad for the environment. No, it uses mostly renewable energy. In addition to the environmental benefits, Bitcoin mining contributes to a more efficient financial system. The traditional fiat-based banking and financial infrastructure requires millions of employees, thousands of branches, data centers, and other resources to function, consuming significant amounts of power. By comparison, the Bitcoin network serves as a decentralized financial backbone, requiring far fewer physical resources and personnel to operate. Bitcoin's decentralized nature eliminates many intermediaries in the financial system, streamlining the process and reducing overhead costs. Sure, the mining process requires computational power, consuming energy, but the overall energy usage is significantly less than the traditional fiat system. Moreover, the Bitcoin network operates 24/7, providing near instantaneous global settlements, contrasting with the slow traditional financial system, which requires trust and centralized powers that can debase the currency supply in the system, which favors a few at the cost of the many. This is why it could take many days to clear and settle transactions across borders. The increased efficiency of Bitcoin network translates to reduced energy consumption per transaction. To transition to a Bitcoin-based financial backbone could result in significant energy savings, as the computational power needed for mining is less resource intensive than maintaining the existing financial infrastructure. As the Bitcoin network continues to mature and gain acceptance as a global financial system, its potential to improve the grid efficiency and reduce overall energy consumption will be increasingly apparent. Preston Pish. So if it hasn't become clear yet, I really, really hope it does. We're almost done. Bear with me. We only have a few more pages. This is actually one of my favorite parts of Bitcoin, where the physical and virtual worlds collide. What I like most about proof of work, unlike proof of stake, is that it actually ties Bitcoin to the real world. How do you give value to something that's digital? Since software is just transmitted information, what gives it value? Most software valuations are based off of copyright law. However, Bitcoin has no central authority that can act in its interest, so there is no copyright law protecting it. Therefore, what gives it value? Satoshi knew that in order for something to have value, there has to be work involved. This is known as proof of work. Most altcoins use the other consensus models and are spun up overnight and aren't based on anything more than an idea. Bitcoin is different. Bitcoin is actually tethered to the real world. There are real costs to mining Bitcoin. Mining farms have incurred costs exceeding tens of billions of dollars in mining hardware and billions in dollars in electrical costs every single year just to keep the network running. This helps set a baseline price to produce every Bitcoin and helps give the virtual asset its value. So this is where a lot of the value comes in. There's always going to be a floor price of how much it costs to produce a Bitcoin. And because of this, it increases exponentially over time. Because, like I said, you're going to have the same amount of computing power and electrical costs, but with less coins being mined. So it's designed to go up forever. The harder it becomes to produce these Bitcoin, the higher the price goes and the asset tends to go. As previously stated, the issuance is cut in half every 4 years, which is known as the halving, which is in April, by the way. With the amount of Bitcoin miners that are able to mine be cut in half, this would expect less people to mine Bitcoin since it has become less profitable. However, this is simply not the case. With less Bitcoin being sold on the open markets by miners, the price of Bitcoin goes up, assuming everything else stays the same. This is why companies are investing more and more into Bitcoin mining every year. This can be shown in the hash rate, as I discussed previously. Let's see what the hash rate is now, shall we? Yeah, did I say it was exponential or what? It's... I mean, it's just going up and up and up. This was literally 2020 when China banned Bitcoin mining. It took a huge tumble. You can't even see it. It went from 100 million exahash or security to 600 million, or maybe it's theta hash. My bad. So you could see that there's more and more people trying to mine this asset. The demand for this asset is unprecedented. Unreal. What I think is crazy is I didn't even mention the fact that, I think I might have, that the Bitcoin miners have started to stop selling as much. They're holding it on their balance sheet. And instead, they're just borrowing money because you could borrow unlimited amounts of money, but you can't produce an unlimited amount of Bitcoin. Do you get it yet? Hopefully you do. So this is why more companies are investing into Bitcoin more than ever. You're going to have this, more people than ever are competing for the remaining mineable Bitcoin, which is less than 2 million at this point, and have to put their money on the line. Bitcoin mining companies have invested tens of billions of dollars to compete and evolve in the most competitive industry ever. This hands down is the most competitive industry out there. Imagine your revenue being cut in half every 4 years, and you have to find a way to increase it more. I mean, you could just look at the chart. It's going up and up and up and up and up. There's so much competition for it. This is true free market capitalism without any traditional oversights. I know people think that we actually have capitalism right now. We do not have capitalism. Bitcoin has capitalism. Right now we have a quasi-capitalistic society, which basically means kind of, sort of, not really. When your base money is being manipulated through interest rates and currency devaluation, then you cannot have a free market capitalist society by the very definition, because money is 1/2 of every trade. Every time you buy something, you buy it with money, whether that be US dollars, euros, or Bitcoin. But Bitcoin isn't changing. So yeah. Time is ticking. Information asymmetry. Bitcoin is a new concept. It's so effing hard to understand. However, once people do, they realize Bitcoin and time are the only assets that matter. Our current monetary system has allowed us to create infinite amount of debt, continually borrowing from our future selves, further expanding the money supply and devaluing our dollar. Once people realize that they can save in an asset with less risk than bonds, stocks, real estate, commodities, cash, etc., and this asset's designed to go up forever, there's no reason for you not to go all in, especially when in doing so only strengthens the asset. And I'm not telling you to buy this. I'm by no means telling you to buy this. You do your own research. I'm just telling you that time is ticking. People are going to figure this shit out. And by the time they do, it's gone. Your opportunity's gone. And I won't be able to reverse that. People don't realize how quickly things can escalate. I mean, it was only a year ago that it was like 20 grand. It's 64 right now. It was only a few months ago that it was 40 grand, literally in December, and it just goes up. This, I've been trying to, this is why I've been really hounding people to understand Bitcoin. It's because it cannot exist in its current form. You can't have an open system and a closed system. And I don't discuss this in this paper, but that's the general premise. If you have something that's infinite and something that's finite, it's always going to, the finite thing's always going to go up forever. You cannot begin to value it in an infinite currency. It's worlds apart. It's like I said, trying to explain gravity to a person that's only experienced zero gravity. You can't. We cannot create more. So the holders of Bitcoin are unwilling to sell, then Bitcoin is going up even more parabolic than it has in the past. Let's think of this in terms of a garden hose. Let's say you want to spray your annoying sister. Mine's named Sarah. First, you turn the valve slightly right, and water begins to come out. It doesn't shoot as far as you want it to, so you turn it some more. Okay, the water is now fully shooting out, but you're not able to reach her. So what do? You begin applying pressure by placing your thumb over the head of the hose and contracting the area the water can come out. This allows the water to shoot further than was previously possible. The more pressure you apply, the farther you can shoot. The same is the case with Bitcoin. The supply is constantly shrinking. This is the thumb. As the issuance goes down over time, people are less willing to sell their Bitcoin. This creates the pressure. Now all we need is the water to start flowing. In Bitcoin, this is the demand. The more the demand we have paired up with high pressure already in place allows Bitcoin to go up and down parabolically. More than likely, Bitcoin will go up parabolically since we are at an inflection point in Bitcoin's adoption. And this was before the Bitcoin spot ETFs were created, which have bought 200,000 Bitcoin in a span of 2 months. All of your models are broken. I didn't even predict this. It's going faster than even I predicted, and I was pretty freaking bullish. So, one scary possibility is that you're not going to be able to buy Bitcoin in the future. Like I said, once miners realize that they could pay their bills with cheap cash, cheap debt, and never sell their Bitcoin, just continually borrow against it. I mean, Bitcoin's the most pristine asset ever created. There's so much upside. Why sell it to pay bills when you can just borrow against your Bitcoin holdings? After all, these mining companies have invested billions into furthering the development of Bitcoin. Since they believe in Bitcoin so much, why wouldn't they hold it? Why wouldn't they double down on their conviction and hold it, the ones that they mined, which only grows in value as they expand our US dollar money supply faster? After all, Bitcoin is the fastest growing asset ever. And Bitcoin, the network, is growing faster than even the internet. This is going incredibly fast. This was only created in 2009. Do the math. If this were to happen, there's no new Bitcoin that are being able to be bought. As of right now, this isn't really being done, but I suspect that with time, this is what's going to happen, especially once banks realize what this is. This asset is incredibly liquid. It's becoming less volatile in terms of US dollars as adoption begins to grow. It's fungible. It's not like a house, you know. One Bitcoin's always going to be one Bitcoin, but one house is not always one house. And it's got all the store of value aspects of gold. None of the downsides. And it's 100 times better. After all, we can borrow unlimited money, borrowing from ourselves in the future. But with Bitcoin, there will only ever be 21 million Bitcoin. You can't borrow 22 million Bitcoin. You can borrow that with the US dollar. You could borrow far more than US dollars than we have in existence. That's how it works. Oh, every asset is collapsing in Bitcoin. The only solution is to board while you still can. Even if you don't believe in it, if others do, it becomes a self-fulfilling prophecy. Not to mention, adoption of a technology follows an S-curve. Once it happens quickly. And Bitcoin is the fastest growing technology ever. There are only 8 billion people in this world and only 21 million seats. The time to act is now. At the time of this writing, we are currently undergoing another systemic banking crisis. You don't think it's a good time to have a little bit of your wealth outside the current system as a just in case? You know, some people look at this as an insurance policy because it's not tied to anything. You know, real estate, stocks, bonds, they're tied to the currency. If the currency goes down, so does the valuations in those. This is outside of it. And this was last year. This was a really big deal. I believe we had the three out of the 5 largest banking collapses. You really think it's stable? Like, Jesus. Okay. Conclusion. If you made it this far, please allow me to thank you for better understanding Bitcoin. What started out as a little project for me has quickly turned into a 20-page synopsis. And believe me, this is just the tip of the iceberg. I've been at this shit for so long. You may ask me why I'm so obsessed with Bitcoin or money. The answer is money is present in every aspect of our lives. It determines how we think, how we spend our time, how we act morally, etc. Having a good money advances society at an unfathomable rate. If you want a better future, you should want a good money. And for the first time in history, we have perfected money. Bitcoin is one of those technologies that you cannot ever fully comprehend. It is like explaining gravity to a world that has never experienced gravity. So even if everything didn't make sense, my hope was that I planted the seed and I got your Bitcoin education started early. Believe me, you're really, really early. I thought I was late. Now, nobody seems to understand this. Like, less than 1 million. I'm not even kidding. But it doesn't matter if less than 1 million people understand it. It's about the assets. Whoever has the money, as long as they understand it, this shit's gone. So, seriously, feel free to text me and give me your honest feedback. I know parts of it may have sounded crazy. They did for me when I first heard them. But I challenge you, keep an open mind. Do not let past narratives dictate how you view this thing. There's nothing more powerful than an idea whose time has come. And with that, we're done. Now, if you want to learn, the person that got me into Bitcoin and really, really hooked, I was into Bitcoin before this person, but I didn't truly understand it until Michael Saylor came on the scene. He was my biggest guy. The next one for me is probably, lately it's been Jeff Booth. Oh my God. This guy's explanation is impeccable. I urge you, seriously, read The Price of Tomorrow or just watch his YouTube videos. Seriously. He has so many interviews and he explains the whole current system in such simple terms where it becomes inevitable. It becomes so simple. They both were tech founders in the 90s and have been on publicly traded companies, so they're not some Joe Schmo. So with that, I'm going to go ahead and end it out here. All right. Thanks.